What's good, YouTube? It's your boy Rich Stay Profit, and I'm back at y'all with another video. And in today's video, I'm gonna be going over something that I learned last week from my mentor, and it's about the 3 phases in the market. And this is something that we use on a daily basis to find setups or just find a direction. It helps us with every other confluence that we see in the market. I'm just gonna give y'all a good ass example today. So if y'all new to the channel, make sure y'all hit that like button, subscribe to this channel for more content where I mainly help traders with their psychology and making sure that they're the best traders, but and also following my journey and seeing how I'm growing from where I was a year ago to today, what goals I've accomplished since last year, and things I'm still striving for. And this is just me documenting my journey, but just trying to get value when I can. So without further ado, I'm gonna hop straight into the video. If y'all want to join my team, my trading team, FBA, the link will be down below in the description. Daily calls, Monday through Sunday, live trading and psychology calls, back testing sessions on the weekends. It's there for you guys. Y'all can try it out for a very low price. If y'all like it, y'all can stick around. And yeah, man, we're getting results every single day. Y'all can check my Instagram stories for posts when it comes to the team and it comes to my journey. But yeah, without further ado, I'm gonna hop straight into it. I'm gonna make it really quick, really simple. If y'all want me to go into a deep dive, we can. I'll do it in another video because I got working a little bit. But yes, with this, it comes to the 3 phases in the market. You just want to paint this picture. So what I did here, I painted a schematic of pretty much the first phase, the second phase, and the third phase, right? So I'm gonna get straight into it. So our first phase is going to be consolidation. And consolidation, if you haven't learned it, you probably have before. Consolidation is just a point in the market where price is going up and down, up and down, and up and down, right? It's just consistently moving around in a way to where it's not really breaking no highs, not really breaking no lows. It's just kind of floating. So I marked it here. That's going to be our phase 1. And here on this chart, this is on Tuesday, September 30th. This was a period of consolidation. And usually when we go for Wednesday, when we look for a setup, I always mark up the previous day lows or highs. So you can see within this range, when we start the new day, the first thing we do on this Wednesday, we immediately run the low of the previous day. So whenever there's a significant low ran, like a previous day low, an Asian session low, that will be considered our second phase, which is run of significant lows. Because I know all of you guys may not trade US 30, but for US 30, it's really like previous day lows. So that's what we are looking for. Consolidation, then a run of a previous day low, and a big push up. So when you see here, the consolidation, the run of a previous day low, and then price pushes up. So now, when we get ready for this third phase, which is the retracement phase, okay? Retracement phase is pretty much price coming back to rebalance that big move that just happened. And it's usually going to continue in the same direction that it pushed from. So consolidation, run of a significant low, which is a previous day low in this case, and then the retracement. So with the schematic, I'm showing y'all literally what happened. You just got to catch it in price. So if we go to this day here, I'm trying to see when exactly, because I entered the market around 8:30ish, right? So we're going to have to zoom in a little bit. What happened on this day? Price had consolidation, the run of a previous day low, and then we had a push. And from that push, we was able to grab an entry. The only reason why I think I had messed up is because I had the retracement. The retracement was still valid. If we pull the fib from this low and we pull it to this high before the retracement, this high was here. And price retraced to this 38.20% before pushing off and pretty much fulfilling our 25% and our 50% extension outward, which was at the previous day high, where price hit it and then started consolidating again. So I'm gonna just show y'all how you can use this to your advantage. Now, when we came to the market, yes, we weren't able to get in at the best place for a retracement, which was at 7 a.m. But if we zoom into the time frames here, around 8:30 is when we got in, right? 8:30 was this big push. Price came back down, okay? And I want to mark off the 1 hour imbalance because that's what we took the trade off of. And the 1 hour imbalance is off of this high here, which is pretty much where the 0% is. And you just zoom in, zoom in, zoom in. You can see here, right at 8:35, right? Right at 8:35, price open. We had a push, knowing we were bullish, and we wanted for price to just show us that we're bullish, retrace a bit, and it rejected off of this 1 hour imbalance, which is hard to see on the 1 hour time frame. But if you zoom in on the 5 minute, you can see here we just be catching it in real time, so it's really hard to show it hindsight. But when we're on the live call, we already understand that price ran the low, price was bullish, price had a retracement previously, and from that we know that price needs to go run this previous day high now with this bullish momentum. So as we're on the call, we noticed how price action is going to move, and we just find the next best entry, which at this time, right at the open, we caught our entry right here at this wick, and we set longs for the previous day high, which was hit in literally 5 minutes. So you can use this to your advantage when you're looking for setups. If you want to know where price is moving, this is what you can use. You can use these phases to show you where you are in the market, and you can get a setup off of it. Now, it might not be the cleanest. Yeah, we might not was able to get an entry here because this wasn't our time to trade, but it's okay because as long as price hasn't hit previous day high, we can still look for long opportunities, which came at our 1 hour gap. So now that I showed y'all where I got the entry, now I can kind of show y'all on the 1 hour time frame where we got in at. And that entry that I showed y'all off the 5 minute is, guess what? It's right here off of this 1 hour imbalance, which is the top of this wick before that push. Price retraced to it, gave us our trade here, and it actually retraced again and then continued higher. It's harder to catch these moves, but I know my mentor only loves the 1 hour time frame and above, but I want to zoom in to show you guys how it looks from within, right? So there's multiple times you can draw a fib. I drew a fib from the first retracement to show where price can extend to. We can get rid of all of this. And that's really it. That is the 3 phases of the market. I wish this example was a bit cleaner. The only reason why I wasn't, for one, it's a Wednesday. Ugh. I hate Wednesdays. This is why I don't like Wednesdays. For everybody that knows me, I don't like trading Wednesdays. The setups happen just not at the right time. So me trying to show this example, it was a little bit more challenging. But I just like clean price action. And I'm back again. So the video y'all just seen was from 2 days ago when I was trying to show y'all another example. And I never really found another one. So I figured today I'll finish the video by finding another example. And I just wanted to make sure it was clean and cut and precise. But I will say the 3 phases they happen, but it's not gonna. I'm not gonna say it's like super consistent, but it's something that you want to keep in your arsenal. That's why I recommend you take notes. But even here is another good example, and this is on NQ, right? And this is on NQ, but I just want to go through the 3 phases with you guys again, so that way you guys can see how they work. So, and this can happen if it's going higher, if it's going lower. It's just really finding the example and really just making it make sense in real time, okay? So this is NQ. We can have that same setup of consolidation. the run of a previous day low, right? I did not want that box to be, yeah. So consolidation, run of a previous day low, get that extension higher, pull that fib out, right? That last bullish run before price retrace at our time to trade around 8 a.m. or 9 a.m. if you're Eastern, right? And for NQ, I use order blocks for entries. So we would use this 1 hour order block for an entry to take price higher, right? And we could target the previous day high in this case, risking. I mean, with nines, you can risk like 30 points. You can risk 50 points to be safe. But if you risk 30 points on a NAS trade, this can amount to easily, if you want to target previous day high, that's a 1 to 5 risk to reward ratio. You can even target a 3 to 1 win risk ratio. So these setups don't happen often, but when they do, the risk to reward is insane. It's insane, to say the least. These are the trades that bring me the 3 to 1 risk to reward ratio, where I can make a lot of money off of risking a certain amount. So if I'm risking 500 in this trade, I can easily make 1500. I don't have to go for a 1 to 2. These type of trades yield bigger risk to reward ratio. So what I want to preach here is these 3 phases are good when price runs a major low, like a previous day low, to go target a previous day high. This is the day that you can risk a little bit more and make a lot more, because you can now go for a 3 to 1, 4 to 1, 5 to 1. You can risk $500 and make $2,000. You know what I'm saying? $1,500 just risking the 500. You don't have to over leverage. You just need to know when the setup presents itself for you to get a 3 to 1, 4 to 1. Take advantage of that. Because I know as traders, we want to be like, okay, I can get a 1 to 2, but can I get a 1 to 3 every day? Can I get a 1 to 4? Me, I understand the way I trade. I mostly get 1 to 2s. And I really don't get 1 to 3s unless there's a run of a previous day low that can reject to push higher. And we can make this confluence a little bit deeper, because I see a 1 hour fair value gap far to the left. And if we pull that over, it gets filled perfectly. So they don't happen every day, but you can keep this in your toolbox for when you want to get bigger risk reward trades, and you can make a lot of money. Okay. So if y'all enjoyed this video, make sure y'all hit a like button, hit the subscribe button for more trading content, more psychology content. And yeah, just follow me along my journey. I'm learning as much as you guys are. I'm always a student. I'm forever a student to the game. I just love when I can piece things together and make it make sense for you guys. Take pictures of this, take notes of it. Go back earlier in the video when I had the 3 phases lined out. I did come back on a new day to give y'all this example, but I wanted to stress that it's not going to happen every day, but when they happen, you could take massive advantage of these moves. So yeah, I appreciate everybody stopping by. This is your boy Rooster Take Profit signing out with another video. Now, I'll catch you guys in the next one. Keep grinding and growing. Put God first. I love you guys. Peace. And here goes another example if you want to go short. So this is recent. We have some consolidation here, it seems. Right? First phase, purple. Get purple. Right? That's first phase. Second phase is the run of a previous day high. Right? Third phase will come after price has a push down and then a retracement of some sort, which it really didn't give too much of a retracement. Right? So if you wanted to get an entry, we can go to a smaller time frame and see where price has a decent drop for you guys to get a pullback. It might not have a fib. I will say that. This one doesn't look like you can use a fib retracement for it, but we can use order blocks. We can use something of importance, a level of importance to get an entry off of. So when price fell, is that our time to trade here? Price fell. I think on a 5-minute time frame, we can get something, right? We got this order block here, 5 minute. On top of that, it's kind of in the gold box, but I want you guys to pay attention here because this is a fair value gap, right? So there's different entry models you can use. You can use fair value gaps. You can use order blocks. You can use your entry confirmations. Once you see consolidation, once you see price run a previous day high or a previous day low, look for your entry point. Your entry point can be really close and not, it can fall without giving you any time to enter, or price is more patient. It doesn't have as much volume, so it'll give you chances to get a retracement to push lower. But in this case specifically, around our time to trade, I get in the market around 8:30. So this fair value gap was created at the high of the day and the previous day high, leaving a gap behind. Price did come up and feel it 1, 2, 3 times, almost 4 times before falling. And this is why price had the reaction it did, and it fell with no remorse. I did catch this short. I did catch this trade recently. So the same things happen over and over again, risking 30 points. The risk reward, it just goes beyond. If we zoom out after having that entry, you can see if you wanted to target previous day low, so 1 to 6, right? If you wanted to just target the breakout, I would say this would have been another time for you to enter, is catching a breakout trade. So if you are a breakout trader, you could have taken a trade at the break of these lows on, I think, what was it, the 15-minute time frame? I'm not sure. I think it was a 15-minute time frame, but the main point here is the 3 phases. You have phase 1, phase 2. Phase 3 was super close, but it's only because it was at our time to trade. So it's not ideal that your entry would be here. We would kind of want it somewhere in the middle, but price is not going to give you every opportunity at an order block. So sometimes you got to use fair value gap fills, and that's just how it goes. So if you didn't catch this entry up here, you could have caught the breakout here, and that could have been your phase 3, or you also get, where was it at? I believe there was a breaker block. There was a breaker block somewhere. The move is definitely happening. The problem is catching it. The later you catch it, of course, the less you can take advantage of it.